Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room streaming from YouTube. We got a really fast market condition this morning across the board, primarily in the digital assets like Bitcoin, Coinbase, GBTC. We're looking at a reversal, a very strong reversal in pretty much, it seems, across the board. One of the comments here that we're going to basically take a look at here is about Amazon beginning to accept payments in cryptocurrency. So there's a lot of excitement going on in the digital world here. We're going to take a look at the gold in the silver market, and we'll also take a look at the robo-advisor, Nikki the Robo, and see what the weekly numbers are telling us here for the rest of the week. It's a pretty full day, and so we'll be right back. Don't go away. Let's jump right into the markets here and take a look at pretty much what's going on right now here. The gold market has been fluctuating up and down into the from the average price all the way up to 1812, as you can see here. We've seen a completion of this pattern here, this bullish pattern that developed early this morning, and completing the target, it reverted once again into the average price that we're looking at right now, which is into that 1803. The volatility seems to be in the silver, which is showing a little stronger bias here, as it also trades around the average price for today. But we're getting a very exciting market once again back into copper. Copper is up 4%. That's a pretty big move here for copper. And we're trading above the sell to level, which indicates that the market is looking for higher fractal prices now as it trades above the daily sell to level. The major move is happening here in Coinbase, up about almost 20%, about 9%, up about almost 20 points. And it continues to break out through the upside, basically trading above the sell to level as well. GBTC up 17%. This is one of the recommendations that we made last week that we can review and see pretty much how accurate the VCPMI AI, basically, or Nikki the robo-advisor, was in recommending this special alert that we publish here on the internet. So we pretty much seem to be aggressively reverting in digital currencies, and we're lagging a little bit here in the gold market, in precious metals, in gold and silver. The dollar is down this morning, and so it should support basically the commodity reinflation trade that has been activated here, as you can see, particularly in commodities. And I want to point out to you that in coffee, Brazil just experienced one of the worst droughts in Brazil. In I believe in pretty close to the 1971 frost that took place in Brazil as well. And you know, coincidentally, the elements that seem to be coming together are very reminiscent of the 70s. During the mid 70s, 76, 77, Brazil experienced a major reversal in coffee due to the frost. About 70% of the coffee was lost in Brazil. And the frost that we are experiencing right now seems to be also in the same areas. And so this just it's the latest information that we're dealing with right now with regards to commodities. But the fact of the matter is that the reinflation trade has been pretty much reignited, and we're looking at copper up, 4 or 5%, up 18 cents in copper. That's a pretty big move. We're looking at platinum, palladium, and once again, I think the gold and silver are going to go in their own time, and I want to focus here in a little bit in terms of the gold market as far as where I believe we are and where we're going to be headed for. The environment that we're dealing with right now obviously is dealing with the talk about inflation. And I want to take a look at the gold market since March of last year. When we experienced the beginning of the pandemic. And during this time, we saw a collapse in the price of metals and pretty much across all assets. And a massive correction took place that brought the gold market down from a high of 1704 roughly to a low that was made at 1450.90, and in all of this took place between March the 9th and the 16th. And what you're looking at here is the gold market pretty much reverting or inverting, I would say, from a commodity to a virtual currency. And I believe this is where the dollar became a commodity, became the opposite. Because what we saw here is basically the gold market rallied from a low of 1451 average to about 2089 by August the 3rd. And in this move, the gold market discounted the current inflationary environment that we're in. the gold market always moves ahead of pretty much what potentially can happen. And in here, it discounted the tremendous stimulus that was agreed upon by the federal government, opening up the gates, basically, of printing unlimited amounts of money as they committed, at this point, about 10% of GDP. So the market got up to 2089 and said, okay, that's a real great move that the Feds make, that they made by the amount of stimulus that they committed to. Now, let's see the actual damage that the pandemic caused. And it went into a correction from August the 3rd of 2089 all the way down to March 8th of 2021. And the law that was made was 1673. It was a 61.8% Fibonacci correction. The perfect Fibonacci correction. Classic Fibonacci correction. This level here is called the golden ratio, and it is a high probability that when the price accomplishes that the market will revert. And in fact, it did, as you see here on March the 8th by closing at 1725. What we have seen here is basically the completion of this correction that the gold market wanted to test the buyers underneath and test and see the real damage that was done. And of course, now we're looking at the inflation factors, the CPI, the PPI, they're all above expectations. According to Shadow Stats, the inflation, the real inflation, taken into account the same formulas that were used back in the 80s, is around 13.5%. The unemployment rate is 25%, accounting for all those who are pretty much, they claim, are not looking for jobs anymore. They just disappeared. And so what I'm beginning to see is a reversion, again, of some of these assets, obviously, that we are seeing that are running into additionally short supplies because of the bottleneck squeeze that we have now in transporting goods. And not only do we have a logistical problem in transporting basic goods, commodities, but we are experiencing severe weather problems. It is exacerbating, basically, the whole situation, in the sense that the demand factor is way above the supply, and therefore the price is being reflected by this phenomenal rally that we have seen in the CPI and in the PPI with regards to inflation of commodity prices. So where are we now in gold? If we take a look at the closer picture, is that we, after the bottom was completed in that 16 Let me open up here for a little bit. The golden ratio bottom was at about 1673. That seems to be the number. And this also coincides with a 9-year average price of 1671. 1771 is the 9-year average price. And so what it seems to be happening here, if we take a look at the gold market, is that it has established a channel, an uptrend channel, and we're trading within that range. In that range, it pretty much is the low of 1673 and the high that we saw here on May 31st of about 1919. And we came down right into the trend line support of 1750 and reverted from there to 1835, which is the recent high that we're dealing with right now. But what I want to point out to you here is that if we take a look at the daily a little closer here, the daily looks like a bit of a down flag, which is a very bullish configuration. A bear flag is bullish. The down bear flag is bullish once it breaks above what seems to be the 1806, 1810 level as a critical level. The 1810 is the 360-day average. So we're getting a lot of harmonic alignments here in price that seem to indicate that we're in a trading range, but if we do break above 1810, we're going to be looking at an acceleration to the upside. And the gold market now, I believe, has discounted, again, completed, you might say, the pattern of discounting the damage, the physical damage, and we're beginning to see now, obviously, the tremendous damage that it has been caused, and still unclear economically. We're at a point, I believe, that is a critical point in the gold market in this trading range, that if we do break above 1835, it's going to be an acceleration to the upside. And I believe the digital markets, GBTC, Bitcoin, Grayscale Digital, GDLC, are amazing, amazing trading instruments that are giving us a tremendous edge, you might say, in building the equity as we patiently wait for the gold mining shares to get some more volume, to get some more interest. And I think it's just, it's a question of simply not if it's going to go, but simply when, and it could be any time, in my opinion. There is a tremendous amount of interest in moving into virtual currencies as a consequence of what appears to be the US dollar weakening here, due to the tremendous stimulus that continues to be the path of least resistance of our leaders in terms of what they feel is what the economy needs, and that's a lot of liquidity, basically. I want to take a look here for a minute. The reports that we put out here, and which are the weekly reports by the Rob Advisor. And I want to take a look, first of all, at the gold market here.
Short, take profits 1786 to 17.
And hopefully for those in the trading room that you can hear that, but I will be reviewing this once again.
Hello everyone, this is Equity Management Academy, with a weekly gold report, for July 23, 2021. Summary. The weekly trend momentum of 1826 is bearish. The weekly VCPMI of 1806 is bearish price momentum. A close above 1806 stop negates this bearishness neutral. If short, take profits 1786 to 1765. If long, take profits 1822 to 1843. Trading instructions. Weekly trend momentum, 1826, bearish. The gold futures contract closed at 1802. The market closing below the 9-day SMA 1826 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Weekly price momentum, 1806, bearish. With the market closing below the VC weekly price momentum indicator at 1806, is confirmation that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops and negate the bearish trend to neutral. Weekly price indicator. Exit. Longs, sell 1, 1822. Sell 2, 1843. Exit. Shorts, buy 1, 1786. Buy 2, 1769. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 1786 to 1769, and go long on a weekly reversal stop. If long, use the 1769 level as a stop close only, and good till cancelled order. Look to take profits on longs as we reach the sell 1 and 2 levels of 1822 to 1843 during the week.
Are you looking for an automated artificial intelligence? Trading system? Do you want to analyze
the intelligence that we are trading here for the rest of this week as it pertains to the gold market, produced by the Robo Advisor, Nikki the robot. And this is pretty much the numbers that you see on the right of the chart indicate the weekly numbers. And so the market is trading below the average of 1806. 1806 is a key number that upon closing above it is going to activate the bullish price momentum. But in the meantime, it's activating the buy 1 potential level of 1786 to 1769. Now, in between here, we have the daily numbers that you see on the left. And below 9690, we're looking at 1791 to 1779. We'll continue to update you here as much as I can in terms of what the market is doing from a technical perspective, from a mathematical perspective, using the VCPMI, which stands for the Variable Changing Price Momentum Indicator, which is using the principle of the reversion to the mean. It's what we call mean reversion trading. And for those interested, reach out to us, subscribe, like, and will be able to, and will be glad actually to send you the recent book that we updated called Mean Reversion Trading. In the meantime, everybody, thank you again for the opportunity to share this information with you here. And I look forward in seeing you again the rest of the week. In the meantime, have a great trading day. Be safe. I'll talk to you soon.